Okay, this is Frank O'Connor, and good afternoon, everybody. Welcome to our Thursday afternoon Rubicon indicator training for Thursday, the 21st of July. What I want to do, obviously, is take a look at our charts, see how we maximize using those charts to trade the Rubicon indicator. Obviously, a very, very busy day today. Let me take a look at the price action today, which was definitely a little tough to trade. I'm going to look at the euro dollar because a lot of activity on the euro dollar today. We can see right here in the chart this big drop of about 140, 150 pips to be followed then in the euro by a massive upturn of close to 300 pips. Now, obviously, that's very difficult to trade, guys. Let me show you. You can see on our 15-minute picked up some nice trades on the way up. But the initial thrust is so hard and fast here that even the Rubicon has difficulty picking it up until it has moved, 60 or 70 pips beyond the spine. And that's a fast and furious move, I can tell you. It moves, what was that move right there? So 70 pips in, 15, 20 minutes. Hard to gauge that. Now, however, there are things that we can do to protect ourselves. The first thing I would suggest, guys, and this is very important, and we've talked about it before, but let me be redundant. Never trade without checking the news events. And there were some significant news events this morning. You had the European finance ministers meeting in Brussels to sort out the debt crisis over there. At the same time, we had unemployment numbers coming out in the United States of America. U.S. unemployment numbers come out bad. Europeans begin to, at least the rumors start leaking out that they're coming to an agreement on the Greek debt. That's very, very good news. Bad news for the U.S., but really good news for Europe. So initially you had this downturn because of the bad news in Europe, then to be followed by the good news in Europe with the massive upswing. Now also remember there is some uncertainty built in there because of the U.S. employment numbers, but also because of what's happening in the House of, in government in the U.S. with this debt ceiling crisis still hanging over our heads. So do not trade without checking what news events are going on. What I personally do is I have my cable TV running in the corner. I have it on the Bloomberg station, giving me a financial news up to the minute all the time. I also have my Twitter feed running, and on my Twitter feed I have Reuters, FX Daily, some other really good FX folks that I follow on Twitter so that I'm continually getting updated and staying current with what's happening. I think that's really important. If you want to be a full-time trader, you got to have and use the proper tools of the trade. Now, having said that, even though the currency moves, we can see these massive gyrations intraday. The big picture almost always will hold true. Let's take a look at that. What do we do always, guys? We always start our trading on the daily chart. And this is where it gets interesting. This is my daily chart, and these trend lines that I've drawn have been there, oh gosh, for certainly since last week. And let me take them off for a moment. Let's get rid of all this and start from scratch. Okay, here we go. So we squeeze in, the first thing always, guys, squeeze in that daily chart so you can get a decent, a couple of years, 2 years, I like to get a 2-year picture and begin looking for support resistance areas. Obviously, there's a very big one up there at the 150 level. I always leave that there because if we start approaching that, I am paying attention. Yeah, Ken's telling me 203 pip spike in pound Swissy, 139 pip spike US Swissy a couple of hours ago. Yeah, it continues on today because we have a lot of news events unfolding throughout the course of today, Ken. So tough day to trade. But bear with me, and I'm going to come back to some of what Ken said right there. So mark the significant areas. We obviously see the 150. Now I also see an area here, which is around the 140 area. Yeah, which is also significant. So let's mark. Again, it's the zone I'm looking for on the, not exactly to the pip, but important. I'm going to turn that white also so that I know that the color is coming in support and resistance colors in white are coming off my daily chart. Okay, I'll just bring this guy back a little bit. Okay, so major simple result, the 150, the 140. And you can see how much that's been in play. Now I also have a long-term trend line here that's been there for a very long time. I will leave that there because if it shows up on the 30-minute or normal trading chart or the 15, then I need to pay attention. The other thing I see immediately is this guy here. Now let's blow that out a little bit. Now I could have drawn this. This came into play back in June the 6th when we started to see this trend. It tested that trend line again on July the 3rd. And look at today. So we were able to draw that trend line a very, very long time ago. And look at what's coming up in our chart today. That trend line coming back into focus. Now let's go back out on that trend line. Oh, yeah. I see what I did. It's even more in focus. Watch this, guys, when I draw the thing properly. Now look at my price action today. We have that trend line on the daily chart coming into view on our intraday chart, on our 1 hour and below chart. So very important. Now back out to the daily for a moment. I'm not finished there. I want to make sure I have everything drawn that I want to draw on the daily chart. There's that trend line. Let's bring it back up. There we go. That's the full thing right there. I do see this little guy here on the daily chart. So I want to make sure that's in there. So that's our trend overall since April. We had started going down. But there's some very big upswings in the process of that downward movement. So even though it came back up today, we're still down 500 pips from the high up at the 149 level. But in the course of that, we have a drop of 1,000 pips, a pullback up of 800, a drop of 600 or 700, a pullback of 500, a drop again of 700, and again a pullback up of 600. So you can see it's volatile, but it's holding that steady to that particular movement. Now I want to check one last thing, and that's the Fibonacci's on my daily chart. So I'll read my chart from left to right, look for the big swing. The big swing is obviously to the upside. Take the lowest point, drop it on the highest point, and those are my fibs, daily fibs. And again, you see those same daily fibs coming into play as we find resistance right here, as we find resistance right here, and then over here, it's in that support zone along that 4,000, 400, 4,100 level. It's coming into that 23% fib. So that's an important support resistance zone. Again, even though that zone is 100 miles, the zone is 100 miles across, I have to pay attention to it, guys, because that's what we got. Now let me drop down to our 1 hour chart. And we want to draw our fibs as it relates to the 1 hour chart. Let me clean up my Rubicon indicator first. Again, I want to read the chart from left to right and look for the swing. So my swing this time is to the downside. Again, one other thing, make sure you don't get your colors mixed up, that you can read them. So I'm going to change the color of my hourly chart. Make sure I know exactly what it is. Let's make it magenta, bright color. So there's my easily visible. Now what I do look for then is there any area where these are coming into agreement? And again, guys, look at this here. That 200 level is a 23 fib on the daily chart, and it's a 50% fib on our 1 hour chart. So, and again, that was in play last week, very much as a resistance level. and then began resistance for a little while this week until it broke through. Now let's blow out the chart, look at it more evenly. Here's that same level right here. You can see it, very significant resistance yesterday. It held the upward movement yesterday. I'm sorry, on Tuesday. It held it on Wednesday, and then eventually it broke through. Came back down, unable to sustain it before the big move up today. There's one other thing I want to draw here, and that's clean up this line here. That upward trend line also off the 1 hour. Now I also notice here that right here, and I very much pay attention when I see this, the spine and an upwardly trend line or downward trend line, as the case may be, coming into play together. That's also, anytime you see two or more indicators coming into agreement, you have extra strength in place there. So I pay very close attention. So if you put all the roadmaps together, you then can see, even though we have a volatile day, we have some indication on how to trade it. So let's look. Drop down to the 30-minute chart. So here's the break. And again, on the 30-minute chart, even though we had a strong pullback here, there was no signal to go short on the 30-minute chart. We're upwardly mobile only. And you had a second bite at this initial break here, up to the 143 level, was a 61% fib. So I would be marking that for the second run up to make sure that I didn't do anything until it broke the 4,300 level. So in other words, we had an initial buy level right here. We can't do much about this spike. You could drop down to the 5-minute and try and trade it, but realistically, guys, you can't do very much about that spike. But I can pay attention as it comes. And the question is, it comes up to major support and resistance. Again, let me go back and reiterate what we said before. The 0-0 numbers. 4,100, 4,200, 4,300, 4,400. Extremely important. It blasts right through the 4,300 level. No stopping at the station. Then you can wait for a pullback. It's gone through our buy line and off you go. So you could take a very nice trade right there. And we get a signal up here. But that's very late. Now, I want to show you one other thing that I did today. I want to be very careful how I say this, because as soon as I do, I may well be misunderstood. So bear with me, guys. I took a trade right here, but I went short. And it pulled back 40 pips. I didn't get the whole 40 pips. I didn't need the whole 40 pips. Why would I do that? I would do it for the following reason. The currency at that point had done a couple of very important things. It had moved 260 pips way outside its normal range. It already had blasted through the 4,300 level. It was now testing the 4,400 level. At the very least, we should get some profit taking coming into play there, and and that would mean a pullback. I took that pullback and I got it. Now I want to make sure everybody understands what I'm saying here. The reasons I did it: the currency had moved 260 pips. We were at a significant 4,400 level. I know because we looked at our charts before last week and several weeks back how significant that 4,400 level has been. It has held it many, many times before. Now, having done that, now let me mark that and drop that baby down to a 5-minute chart. How can I get more specific on that? Here's my level here. I see it begin to, let me just get rid of this guy now. There's my 4,400 level. Comes up, spikes, and then immediately pulls back. You get that doji candle in there. That's my first indication.